Hey, it's Wednesday, February 18th. I thought I'd get on and put a video out about DEXFi bonds. It's actually, shout out to CK. He puts out a couple of videos a week about DEXFi and explains it so well. So I'm going to actually put those, there's two of them that I'm going to put on at the end of my comments here. But this one's just, I withdrew yesterday and it was 3,100. When you claim, it just takes out the whole amount, and it went right to my wallet, and I actually withdrew, and it just came right into here. So yeah, I took out 2,000, and I had the USDC comes right into my wallet here, so I have 1,200 left, and that just keeps building and building. This since yesterday has already gained $348. As far as the link to get into this one is in the description below. I'll just put that in there if you want to get in. It's very secure as far as going up and down with the APR. That definitely does happen, but right now it's right around 10% a month. I actually put a calculator up here. Like say instead of in your bank account when you have a savings there that's earning 1-2% a year. Anyway, this is 120. If you divide that by 52 weeks, you get 2.3% a week. And let's just say you have 10,000 in there. After 1 year, you can see the progression here. It's just compounding every time. After 1 year, you'd have 32,000 in there. So over, you'd triple your money instead of just getting 1%. Anyway, way worth it and very secure. But I wanted to let you also know that with my DSJ promo that's going on, I have 4 people that have reached out and is joining up. And so there's 6 spots left. So I just wanted to make sure everyone knew there's 6 spots left to getting a free $500. If you want to check out that, look at the video at the end here. I'll have one posted to talk about the promo for DSJ BG Wealth. All right, here's CK explaining DEXFi bonds. Have a listen.
Just a quick but important heads up before we get started. This is all for educational purposes. It is absolutely not financial advice. Okay, let's get right into it. Today's report is really a tale of 2 completely different stories happening at the exact same time. We have this huge celebratory milestone that's colliding head-on with the pretty painful new low. So let's break down what's really going on under the hood. And first, the big news. The fund has officially blown past the 50,000 bond mark, now sitting at 50,092. This is a massive milestone, both psychologically and structurally. It shows some serious, unstoppable growth, especially considering it's happening during one of the most fearful market periods we've seen. But, and this is the tough part, here's the other side of that coin. While the fund's capacity is growing, the daily profit has just hit its lowest point ever recorded, just over $3,600. It's a really stark contrast, and I get why it can feel pretty confusing.
So what in the world is the real story here? Are things good? Are they bad? Are we seeing growth or are we seeing decline? Well, the answer is kind of both, and understanding why is the key to everything. A huge piece of that growth story is a major new strategy the fund just put into play to squeeze out every drop of efficiency.
And that strategy is the Aave leverage strategy. You can think of this as a move to maximize capital efficiency. It's all about taking capital that was just sitting on the sidelines doing nothing and putting it to work to help grow the fund's total capacity. So how does it actually work? Well, it's a pretty straightforward 3-step play. First, the Treasury took 185.9 ETH and supplied it as collateral to the Aave v3 protocol. Step 2, it borrowed $120,000 in USDC against that ETH. And then step 3, it immediately used that borrowed USDC to buy more bonds. So the result is, the same base of ETH is now backing even more bond positions, which means it's generating more fees. Now look, whenever you hear the word leverage, you have to talk about risk. It's non-negotiable. In Aave, the main safety metric is called the health rate. Just think of it like a safety score. The higher the number, the safer your position is. If that number ever drops all the way down to 1.0, that's when a position would get liquidated.
Right now, the health rate for this position is a very healthy 2.54. So what does that actually mean in terms of risk?
Well, to put it in plain English, the price of ETH would have to absolutely crater. We're talking a drop of about 55% from where it is now, all the way down to around $870 before this position would even be at risk. So, yes, it's a calculated risk, but one with a pretty significant safety buffer.
Okay, now let's address the elephant in the room head on, the yield. And, there's no way to sugarcoat this. We are seeing a really significant compression right now. The daily profit is finding what looks to be a deep bear market floor.
I mean, just look at this. Only 1 week ago, we were celebrating a daily profit of over $10,000. And since then, it's been a clear staircase down from $7,500 to under $5,000 and now to today's low of $3,615. That is a staggering 65% decline in just 7 days. And this is super important. You might be looking at your dashboard and seeing an APR of 126%. Let me be absolutely clear, that is a display anomaly. It's not real. It's probably just annualizing a single strange compounding event. The reality, the true run rate based on what's actually happening day to day, is in the neighborhood of 6 to 7%.
So why is this happening? Is the system broken? No. The cause is actually pretty simple. Market volume. It's at the lowest level we've seen since early January. You got to think of it this way. The engine is fine, but the weather out there has just gone completely quiet.
But here's where the story takes a fascinating turn. While the yield is taking a beating, the fund's capacity, its actual size, is telling a completely different and honestly, a much more powerful story. We are seeing incredible growth happening at the exact moment of extreme market fear. Just check this out. Since that big crash on February 6th, the fund has rocketed from just under 40,000 bonds to over 50,000. That's an increase of more than 10,600 bonds in only 10 days. That represents something like $450,000 of fresh capital flowing in. That is a huge sign of conviction.
And it isn't just about more bonds. It's about smarter diversification. The BNB chain vaults have jumped over 37% just since Friday, mostly because of brand new ZEC vaults. We're also seeing new positions pop up in AVI and even SPX Wormhole. So the fund isn't just getting bigger, it's expanding its footprint and getting more resilient during this downturn.
And this brings us to the core idea here, and really why focusing on capacity is the most important metric to watch right now. Let's just look at the simple math behind owning these assets in a bear market versus a normal one.
This table really puts it all into perspective. Today, with our 50,000 bonds and a bear market APR of around 6%, the total daily yield is about $7,100. Okay, but now take that exact same 50,000 bonds operating in a historically normal market at around a 65% APR, and it would be generating roughly $40,000 every single day.
And that right there is the key takeaway. We are looking at a potential 5.6x multiplier on the exact same asset base once market conditions recover. The capacity is being built and locked in now at these lower prices, preparing for a future where that capacity can become exponentially more productive.
So, where does all this leave us? Let's pull all these pieces together for an honest, mixed verdict on the fund's overall health, weighing that structural expansion against the very real cyclical pain we're feeling.
And this slide just perfectly sums up the two conflicting truths. On one hand, the structural strength is just undeniable. We hit the 50,000 bond milestone, the AVE strategy is deployed, the fund value is holding strong, it's all green checks. But on the other hand, the cyclical pain is very real. Yield at a new low, bond prices are slipping, market volume is in a ditch, and fear is absolutely extreme.
And this really sums it all up. 50,000 bonds, near zero idle capital, built at a fear and greed index of 12. The engine is the biggest it's ever been, running at the lowest RPM we've tracked. Either the weather changes or it doesn't, but the capacity is locked in.
And to wrap this up, please remember, this analysis is for educational and entertainment purposes only. It is not financial advice. All cryptocurrency investments carry significant risk, and that includes the potential for a total loss. As we talked about, that 126% APR you might see is an anomaly. The true rate is closer to 6-7%. The AVE strategy does introduce a specific liquidation risk if the price of ETH drops dramatically. And as always, past performance does not guarantee any future results.
Just a quick but important heads up before we dive in. This report is purely for educational purposes. It is absolutely not financial advice. As you know, all crypto investments carry some serious risk. Welcome to the Day 69 Health Report, and wow, what a day it is.
We are looking at a story of just incredible contrast. The DEXFi fund just smashed through to a brand new all-time high. And at the exact same time, the broader crypto market is gripped by a level of fear we haven't seen in a good long while. So let's break down what in the world is going on.
And there it is, over $2.18 million. That's a new high watermark for the fund. Now, that's a fantastic milestone all on its own, but what makes it truly, truly remarkable is the environment this was achieved in. And here's the other side of that coin. The Fear and Greed Index has just collapsed to a 10. That's a level of extreme fear that usually signals people are panicking and selling everything. So how is it possible that the fund is thriving while it seems like everyone else is terrified? That's what we're going to dig into. So here's the game plan for today. We'll kick things off with that headline contrast. Then we'll dig into the capital efficiency that's really driving this growth. After that, we'll decode the latest volume and yield numbers, check in on our expansion on the BNB chain, and then we'll talk about a really key concept, structural versus cyclical strength, before we wrap it all up with a final verdict. Right, the really crucial point to get here isn't just about the price going up. This is a fundamental, a structural high. It's about the very engine of the fund itself getting stronger. And this slide, this shows you exactly what I mean. Just look at this growth. In only 11 days since that last market crash, over 11,000 new bonds have been minted. That's a 27% increase. Every single one of those new bonds strengthens the fee-generating engine. This shows real deep conviction from investors at a time of maximum fear. It's incredible. So how is this growth being fueled so effectively? Well, a huge part of the answer is a much more aggressive and efficient use of capital. So let's pull back the curtain on the AVE margin strategy and see exactly how it works. Okay, this is the strategy in a nutshell. It's a simple flow, but it's incredibly powerful. First, the fund supplies its ETH as collateral on AVE. Then it borrows stable coins against that ETH. And the final, key step, it deploys those borrowed dollars directly into the vault's liquidity positions. This means more capital is out there earning trading fees, all without selling the underlying ETH. It's pure capital efficiency. And you can see this strategy was deliberately expanded, just in the last 24 hours. The ETH supplied is up over 16%, and the amount borrowed is up a massive 37.5%. Now, you might seem more aggressive on the health rate and get a little nervous, but check this out. The liquidation price for all that collateral is still way down around $750. With ETH near $2,000, we have a huge, huge cushion. And here's the beautiful result of all that efficiency. The fund is running with basically zero idle capital. Just over $1,600 sitting in the wallet. Every single other dollar is deployed and working hard to generate fees. This maximization of capital is without a doubt a key driver behind that new all-time high. All right, next up, let's talk about the daily profit. Now, these numbers might seem a little low at first glance, but it's super important to remember we're just coming off a long holiday weekend, and that always has a predictable temporary effect on trading volume. As you can see, volume is already on the upswing. After a little dip for the holiday on Monday, Tuesday's volume climbed right back up to nearly 8.4 million. That daily profit figure you saw is just a lagging indicator of that quieter weekend, and we fully expect it to normalize as the week gets going. This really shows how we think about performance. While short-term APR can have these awesome peaks like the current 123%, we really focus on the steadier, long-term path. Our true benchmark, our North Star, is that 9-month average of around 65%. It smooths out all the daily noise and gives a much clearer, more honest picture of the fund's health over time. And hey, here's another really healthy sign. The diversification is improving. The concentration of volume in our BNKR pool has dropped from 48% all the way down to 32%. At the same time, the Zora pool has surged to 41%. Spreading that volume across more assets like this just puts the fund in a much healthier, more resilient position. Okay, let's talk about another key theme for today, and that's proactive growth. While the rest of the market is fearful and hiding, the fund has been actively expanding its footprint, especially over on the BNB chain. Just look at these numbers. The value on BNB chain is up over 7% overnight and an incredible 86% since the crash. And this isn't just numbers going up passively. The fund has been actively opening new vaults, including a $33,000 ZEC pool and a new $10,000 Bitcoin pegged asset pool. This multi-chain strategy is just such a powerful form of diversification. So this all builds to what I think is the most important concept for today's entire report. It's understanding the difference between the fund's underlying structure and the cyclical market weather. Think of it as the engine versus the weather.
And this slide? Wow, this slide really says it all. Just 11 days ago, the market was in a crash. Today, the fund's value is up over $800,000. The bond count is up by more than 11,000. The BNB deployment has almost doubled. This is the engine being rebuilt, bigger and stronger than it has ever been.
Now, you might have noticed the bond price ratio has declined a bit. It's a fair point. But this is a perfect example of what I mean by cyclical market weather. This is not a structural problem with our engine. It's happening simply because altcoins as a group have been underperforming ETH lately. When that market trend eventually reverses, this ratio will recover.
So, with all of that data on the table, let's pull it all together and deliver the final health verdict for day 69. Our health dashboard shows a sea of green right where it matters most, in the structural components. Fund value, bond growth, capital efficiency, and diversity. All green, all strong. The yellow items, those are the temporary cyclical conditions we just talked about, the post-weekend volume and the market-driven ratio. And that single red flag, that's just market sentiment, an external factor that the fund is clearly proving it can handle exceptionally well.
And this leads us to one very clear conclusion. The fund is structurally healthy. Its core engine is stronger than ever, and it is perfectly positioned to capture value when market volumes and sentiment return.
I'll leave you with this thought. 51,000 bonds, operations across 4 chains, near zero idle capital, and all of this was built while the market's fear and greed index sat at a 10. That's not hope. That is a structural advantage. And to close out, let's just quickly review the full risk disclosure. This report is for educational purposes and is not financial advice. The APR is variable and not guaranteed. The Aave margin strategy does introduce liquidation risk. A 10% exit fee applies to bond redemption. And it's so important to remember that past performance does not guarantee future results. Always do your own research. Thanks for watching, and we'll see you for the next one.